Okay, can everyone hear me? Just type a Y. Awesome. Welcome to our Crypto Masterclass mini on tax, crypto structuring and templates. And I think we can all see that cryptos have made a bit of a move, and many say have still got a fair bit of a way to go. And I'm sure Trent would agree with me here. And I'm here with Trent, my right-hand man, in doing this series. And Trent, just say a quick hi before we get started.
Hey guys, good to see everyone again on a Wednesday night. I think anyone that's in crypto is going to be pretty excited around about tonight's presentation that Warren's got. One thing that I definitely notice when we talk around about crypto is that a lot of the time people can get very excited about crypto for themselves. But one thing that people quite often forget is, well, what happens if something happens to them? Who's got access to the keys? Who's going to actually inherit that crypto? Do they have access to that crypto as well? So I think as Warren talks tonight, I think around about your crypto investments. Those that are in crypto know that it is a long-term investment. There can be some short wins, but whilst you think about yourself and your own structuring, if you're somebody that's got children, you're a part of a family, also just be aware of, what may happen if something, touch wood that this never happens, but if something happens to you, then what does that mean for your cryptos? And what does that mean to the person that may inherit those cryptos? Because definitely if they're in that strong and are in your own personal name, the people that you pass it on to will absolutely be liable. So don't just think about yourself in this crypto, but think about everybody else. And I might just jump back on at the end. I'm just tidying a few things up as you do this, mate, but I might just jump on
Done.
the back end.
Sounds good. So Trent will be coming back at the end. We'll be sharing how we can help you. Thanks for coming, Trent. So you'll be hearing from Trent later on. So, okay. So who here is in crypto or is keen to be in crypto? Just type a me or something in the chat. So I'll tell you what I'm not going to be giving you today and what I will be giving you today. So it's all part of this Securing Your Wealth series. What I'm not talking about is I'm not going to be teaching how to make money through cryptos. Number one, I'm not licensed to do so, but there's better people than me. What Trent and I can do better than I'm confidently saying most people is how to keep them, because very few people understand cryptos and understand the very strange nuances, as you'll be seeing very shortly. With that further, let's get straight on the way. As of course, normally, we are not giving you any financial, tax, legal, or other advice. Don't run away and do a whole crypto structuring without getting proper advice and say, these guys told me to do it that way. So as usual, stay focused. It'll go for about 60 minutes is my plan today, and be finished by 6 o'clock Perth time, 8 o'clock Eastern Standard Time, maybe 5 minutes over after question time, and showing you how you can do something about it. So we'll be sharing a little bit about this today. We'll be giving you a really, really good overview of cryptos and how it works, and giving you a great offer at the end if you just want to get in there and basically get what I call cutting edge. And we've got some really good bonuses with this today, just because. So I'll be upfront. We'll be giving you an unbelievably good offer at the end on this one, just because. Yeah, look, let's just say we've got a first of its kind thing happening right now. And between myself, accountant, and a bookkeeper, we have come up with the first of its kind crypto position paper, which, pretty much nobody else that we know has done this anywhere. That will be part of what we're offering you. So you'll be getting the best stuff imaginable. So let's just go into crypto structuring, which is what I'm going to be focusing on today, and why this is really important. One of the things that we tend to do, it always fascinates me with structures, like how most people, I mean, basically, when's the best time to get car insurance is my question to people. Is it before you crash your car or after you crash it? What would you be the answer to that? Before or after? Type in the chat your answer. It's no trick question. One person says before. A few of you, absolutely. As much as we'd like to do it after, as one of my friends who decided not to get health insurance, travel insurance. He then went to US, had a motorbike crash. His wife had 49,000 US worth of injuries, and he's frantically trying to get an insurance in Quick Smart. And of course, it was after the fact. And as he says to me, why did I not do it? I can't believe it. So the best time to get insurance is always before you have the crash. So when's the best time to get crypto structuring, everyone? Is it before you make money or after you make it? Just before or after? The answer is before. I mean, yeah, it would be amazing if basically we could do it after, but of course that's what's called illegal. And then people are frantically trying to do it. And of course, if my friend was saying, oh, I was trying to fudge the insurance, but I realized it would be fraud, so I didn't do it. So the point I'm saying here today is if you're in cryptos and believe it's going to go up, and I'm not saying any financial advice here, but if you believe it and that's why you're doing it, then you want to be structured beforehand. And, just that little bit of extra money just to do it properly could save you an absolute fortune when it goes up. And you've seen our previous webinars, for those of you who've been in the previous ones and showing how literally just a simple bit of structuring on a couple of $100,000 gain could save you 20, 30 grand or more. On a $400,000 or $500,000 gain, it could save you like about $100,000 to $150,000 in tax. Even if you make 100K, it could save you about a 10, 20, 15K, way more than you'll spend. And that's the first thing for you to start with and to realize. And so, look, we don't know what's going to happen with crypto exactly. I would be very surprised myself if now that crypto is mainstream, if the top ones don't do very well. My personal view is if I won't, like I said, which one, I'm actually in Ethereum more than most. Again, I may not be right. I just believe once it breaks its all-time high 4.8, it's going to 10K, and if it does, well, I'm going to be glad I'm structured, as an example. Others, like Trent and others, more like Ripple. Others like, Cardano. Some of you just like to go in a little bit of all, which is really, to be honest, more what I do myself. I'm in about 20 or 30, but I've got a bit more in Ethereum and a couple of others than others. So the point I'm making is it doesn't really matter. You want to make sure that what you've got, you're in it and you're doing it for the long haul and making sure you're structured right from the beginning, as an example. And the general belief is 8K plus on an Ethereum for most people because of the high institutional adoption, just as an example. And that would be basically almost a doubling of the current price and things like that. So you certainly wouldn't want to be giving the tax man any more than you legally have to on your cryptos. And the real killer, while everyone focuses on their gains of excitement, is poor planning and poor structuring. And look, it's not entirely your fault. The reality is cryptos has been a hard thing to structure because it's been anything but mainstream. Good luck using banks to get money in and out of crypto. I mean, I've done it, but it's hard. Good luck trying to open up a crypto account in most exchanges in a company trust or super fund. You can do it a little bit more now, but for many years until recently, you couldn't do it very easily. And still in Australia, some exchanges, you can't do it very easily with all the KYC. Good luck if you've got an online wallet, like let's say you've got a MetaMask. I mean, how do you actually link your MetaMask to your structure? And if you think about it, like my MetaMask is over here on my screen where my mouse is, my MetaMask. And I mean, how do I link that to my structure? The answer is I can't really without some kind of documentation or evidence. Otherwise, the tax office say under Section 190 of the Tax Act, well, because you don't have any proof, we're just going to treat it as if it's in your name, and we're going to tax you on the amount of tax you'll pay is officially a fuckload. Or if you have your Solana wallet or whatever else, or your Phantom wallet over here, you're going to pay more tax than you need to. If you got your Trezor or Nano Ledger hard wallet, I'm sure you're getting the drift. Who here knows that right now their structuring would not withstand a test if I made a lot of money and they got looked at by the ATO? Just type a Y. Who knows you wouldn't withstand it? Because keep in mind, their AI and their systems, crypto is a big money focus for them at the moment. If I was the ATO, I'd be putting a lot of money in because you've got a guaranteed payday with the way most people are structured. It's just a fact. And as I said, not entirely your fault, but it is going to be your fault if from this day forward you don't do something about it. So the basic idea is it's the elephant in the room. So what happens if you ignore your structuring? You don't have any protection, as Trent said. You could default to maximum tax rates. On top of that, the ATO said, because you were a naughty boy or girl, we're going to hit you with ATO penalties and interest. And just like that, you miss that opportunity forever. And all you'll have is a life lesson. And my question is, would you rather not donate any money you don't want to the ATO, or would you rather have a life lesson? Hopefully, would you rather not donate or have a life lesson? And I'm sure no one's going to put the words life lesson in the chat. I'm sure you would rather give no unwanted donations. So the short answer is you want to make sure that you've done it properly. Most people just are not prepared for this. These are the kind of individual tax rates you can get. Now that 0% is incorrect. I just realised there was a glitch in the system, so that definitely is not correct. Basically, it's 50%. So ignore that. That is completely incorrect information. But it's 50% less, basically, when you would pay. So you're never going to pay more than, say, around about 24% maximum. And in most cases, you'll pay a lot less with the ATO discount. So, yeah, like I said, I'm embarrassed by that. I completely missed that when I was doing my final go over my PowerPoint. Okay, so these are some of the stuff that the ATO have been noticing. And these are some of the stuff that's coming up in basically various studies. 1.2 billion undeclared crypto, many taxpayers reviewed, penalties up to this. So I think the ATO have $1 billion payday coming up. That's how they work on their numbers. They do numbers, calculations, and referencing. So the ATO tracks you in various ways. Exchange data sharing, because now to operate within Australia, you have to have CoinSpot, Binance, Kraken report everything. We're living in a lovely global surveillance dictatorship now, as many of you know. AI pattern recognition now means that supposedly private wallets that couldn't be traced are more easily traced now using their software than they used to be able to do, very sadly and very unfortunately. Blockchain analysis, public ledger forensic tools, and these wonderful things called Section 264 notices, like where they just get compulsory info requests. So the question is not, do they know about what you're making? The question is, they know. It's just the question, are you going to make sure you've done everything that you can? One of the things I've noticed with extremely wealthy people compared to people who aren't is they've already done a large amount of their planning and they don't really break laws. They stay on the edge, but they don't break laws because they've realised there's no point putting your hard-earned wealth at risk by doing silly things to try and avoid the government, In other words, as much as the government are directly, misuse money and are taking a lot more than they should, at the end of the day, they've got power, they've got resources, they do offer benefits in terms of the system they've created at some level, and whether we like it or not, there's a learning to work within the system that's there. And so to do that, it's learning to be smart, and that's the two ways you can do it. One is to fight the system. Another one is to find a way to work within the system, but do it in a way that you won't give any more than you legally have to. And the exciting news is you just have to look at Kerry Packer and look at the richest 56 Australians, which I showed you in my webinar, a couple of my last one, where of the 56 richest Australians in 2016, 2 actually paid any taxes, and everything was legal and above board because they just knew the system and did things correctly. So a lot of it, I'm not saying you're going to necessarily be able to do that because they spend a lot of money. There's a lot of stuff they do, but you certainly can pay less and you can protect your cryptos from being taken by someone. And without the correct paperwork, you're going to be exposed. And today, I was talking about in my common law webinar that you want to plan for what's difficult while it's easy to do so. And the worst time to try and do something is basically when it's become too hard to do anything. That's like the worst time to do it. So you want to plan for what's difficult, like basically while it's still easy to do so. And it's a great rule. It's basically from the art of war. So plan for what's difficult while it's easy. So the best time to set yourself up is when there's really not much attention to your affairs, things haven't exploded exponentially, and you still can do it before you wake up one day. And as we know with cryptos, I think every time cryptos does a sudden boom, I sit there kicking myself and wish I'd bought more. And every time, and I think we would all agree. And the last thing you want to do is be frantically getting your documents and your structures together when it's too late, when it's already gone up a lot, and then trying to backdate documents and hope you don't get caught by the government. And we don't really want to be doing that, do we? So these are some of the reality checks and the kind of thing that can actually happen if you haven't actually structured it. And this is like a really bad case scenario that can happen to someone who actually doesn't structure himself properly, in theory. And let's say that they sell less than 12 months and they don't have ways to minimize their taxes or they buy in the wrong structure. That is a very realistic scenario for people. And as a lady said to me over here in Bali, where I'm at the moment, she said, I don't really want to be doing a JV with the government for 40%. I agree if you don't want to be JVing with the government unnecessarily. In other words, have a forced equity partner in your affairs. 100%. Yep. Rebecca absolutely agrees. So fantastic. No one else? Everyone else happy to give the government an equity share? Hell no, Kirsty, Andrew, exactly. So, yeah, but through trust distributions and mucking around, let's say if you were able to get your tax down to 15%, here's an example. You saved 167,000 of taxes 100% legally without really much problem. So there's all kinds of things you can do, even by a 50% discount. If you've basically been up for a higher tax rate, you can cut it in half, and things like that. So the timing can save you a significant amount of money being subject to tax and things like that. So there's basically various things which you can have. You can be set up with some fairly large profit and fairly large taxes and things like that. And then simply by distributing to low-income beneficiaries, even on a small gain, she's able to cut her tax down even more and save $5,000. Doesn't save much, but it's better than nothing. And you've got something in there for the future. So even small amounts, you can still end up a lot better off. And I always like to show the particular situation of the difference of what happens on a 100K gain, just simply by how much you keep compared to how much you don't, depending on what your age is and things like that. So these are just giving examples. Keep in mind with a trust, it's not 15%. It could be anything from like 10 to 25, depending on how you move it, even more if you don't use it correctly. But let's just say 15, 20%. You can see that you keep more money in your pocket when you do otherwise. So it's a really good way to do things. So really, it's why you always want to structure before you make your profits, always. So why timing matters is you establish your structures before major trade, you accumulate, which means you build positions in tax-efficient vehicles and asset protected, realization, trigger of maximum protection, distribution, allocate to lowest tax rate beneficiaries. The other reason is I remember my client and friend Matt ringing me and coming to see me for a consultation many years ago. And I'm talking about many years ago. And he really wanted to structure him, and he really was arguing with me why I should do a trust and saying, I'm just not big enough in what I'm doing. So I'm telling you, Matt, don't ignore me. Set up your assets, move your shares in a house. And and I said, you're good at what you do. I'm smarter than you when it comes to this. And I could speak back direct with Matt. So he goes, okay. 3 years later, he rings me and he goes, thank you, Blackie. And that's what he calls me. Some of my really close friends call me Wazza or Blackie. And they go, what's up? And Matt, what do you mean? He goes, I'm about to go bankrupt. And he said, because of my business partner suing me. He said, the trustee in bankruptcy is so pissed because they can't get anywhere near my shares or my assets, and that's thanks to your trust. As soon as they saw the trust, they knew they can't get anything. He goes, thank you. And I said, you're welcome. So it was a really good example of something that happened in real time. And I saw that happen. It happened to me. Trusts give you a get out of jail free card. Like years ago, I had to use mine. I made a bad mistake in business 17 years ago in the GFC, almost sent me broke. And in fact, I remember the liquidator who was shutting down my company saying to me, your brilliant structures have saved your ass and saved your assets. I said, I know. It didn't save my pride, and I went away licking my wounds, but it saved my future. So who here would be absolutely stressed out if you knew you'd lost everything and you could have avoided it? Just type a Y. I think most of you, and it's good. Who here would happily lose all your money and you don't care? Just type a me if you really don't care because you just see life as short. Not many people saying this, are there? If there was any, I'd say donate your current money to me. But okay, that's a joke. But you get what I'm saying here. So if you want to succeed, you got to take risks and basically take what I call seasoned, considered, well-reasoned, well-careful risk. I love what Packer said. I'm not evading tax in any way, but I'm minimizing it. Anyone doesn't minimize it once their head's red. So this is just an example of Uber. Now, keep in mind, I just want to show you that doing things to legally minimize your taxes is not wrong, and to structure yourself correctly for wealth protection. I had the ATO audit me some years ago, thinking I was doing all kinds of dodgy things with my structures. And then they said to me, they says to me, are you actually setting yourself up? Basically, are you saying, so you're doing this as asset protection? I said, yes, because at the time I wasn't using any offshore structures for taxes. He said, oh. So he said, you're just trying to avoid, protect your wealth from anyone suing you. I said, yeah, we don't give a shit about that. That's fine. And that was the end of the conversation. So I'm sure you would agree. So the government don't really care if you do things correctly and if you do things properly. So, and things like that. So it's a good thing for you to know. So these are just examples. So what are covered options that you can do for your structure? We've already covered this in previous webinars, so I'm not going to go too much into this today. I just want to bring this up for you because I'm going to do some more specific things around crypto shortly. So if you want to know more about this, go back and watch the previous webinar on companies. This goes through that. If you want to know more about trusts, go back and watch the previous webinar on trusts, okay? Read about CGT discounts, multiple beneficiaries, asset protection, and that's all covered in the previous one. If you want to know more about taxes with a super fund and putting your cryptos in super, you can do that too. And just keep in mind that with super, there's a lot of, this is a hard one right now because we're still trying to work out how to put cryptos in super. And as you'll hear with our 997 offer, we found a bit of a way to do it using stuff. And of course, you still have to check with your accountant, but we found a way for you to own cryptos in your super fund if you want to do that. Basically, and which you obviously have to run by your accountant. This is just for educating purposes. Who here is very interested in that, by the way? Who's very keen to kind of find out more how to do that and the kind of paperwork you got to do? Absolutely. So you can do that. And we've got the stuff to do it. I've had accountants involved and bookkeepers to check this. And we've even had a super fund auditor review it. So this is not stuff which I pull out of my butt. It's stuff that we've actually got checked and things like that. But of course, you do have to always check with your own personal auditor and account and that. So this is another example, but again, we're not covering so much foundations in this webinar, but that's another way that people do it. And you can also own your cryptos in a foundation. So what are some of the other things you can do? Residency planning is another one. Again, I'm not going to make too much comment on that. We're going to be covering offshore next week. This is more just for you right now. Next week, we're talking about plan Bs and why we think that it's urgent that you have a plan B offshore. And I really mean that. So you don't want to miss next week. I think we're at a critical stage in Australia. I think we're in deep shit at the moment. And although I still believe in it and like being here, I think you'd be crazy not to have a plan B. Type the word me if you agree with me. If you can see that we have some problems in this country right now with the lunacy that's going on. Yeah, especially when you're in Bali talking to people here, they're like, oh yeah, baby. So one of the things I want to mention specifically is the linking problem. So I mentioned that already. Like, how do you link a crypto wallet with a structure? So let's say you go, hey, Warren, hey, Trent, we're going to set up a trust. And we go, yay. And then you got your super fund. And this is what the ATO have been struggling with. Like, to buy crypto in a super fund, I mean, how the fuck do you link it if you can't open an exchange in the name? Like, let's say that you have to hold it on a wallet like MetaMask. How do you do it? Well, this is where you need paperwork. You need custodian proof that actually shows that it links. If you have it in a trust, as I've mentioned to you already, if you got your Trezor wallet, it's a hard wallet, as an example, or you've got your MetaMask over here, or you've got your Phantom wallet, or your Solana wallet, or you've got your Nexus wallet, or whatever else you've got to make sure it's linked back to it. So this is what we're going to be showing you shortly of how we've solved this problem. And making sure that even in your exchange, if you're like, shit, let's just say you go to CoinSpot or Coinbase and try to open a account in your trust and you're having a nightmare and you go, fuck, how do I do this? The good news is there is a way around doing it. There's a way around doing it. So that's the good news. And sorry about this light down the middle here. I mean, this room is the hardest place. Oh, that solves it. Maybe it's just leave my hand there all the time and be a Jedi. So that's just my lightsaber. Anyway, look like a Jedi now. Okay, so you can call me Warren the Crypto Jedi. Sorry, this is what Bali does to me. Okay, so the trust company. That's what you expect with someone who's a bit crazy. So what are the kind of things that you want to start looking at doing apart from opening an exchange? So one option is, of course, you can open your Coinbase, your CoinSpot, your CoinJar, your Independent Reserve, your Binance account in the name of your company, your trust, or your SMSF. And I mean, apparently it can be possible now, and it's not easy, but it can be done. But I'll show you a little trick that I discovered because in my deep, dark, evil days, before I found salvation and left the government, started working here and left the legal profession, I remember I learned about this thing called bare trust or service agreements. In other words, a way where you could set up documents that could link something that otherwise wasn't linked. I'll give you a very simple example. Let's just say that I decide, but I really want to buy Trent's property, okay? And let's just say Trent didn't like me. I mean, he does, but Trent's like, no, I wouldn't sell the Wazza. Fuck that. So I then go to Grace, who some of you know, and I just say to Grace, hey, Grace, can we do a bare trust or service kind of agreement? And I'm going to basically do an agreement where you're going to agree that if you buy Trent's house off him in your name, that you're doing it on my behalf. That creates what's called a trust arrangement. That means there'll be no capital gains, no nothing, if Grace then basically buys it and then transfers it back over to me. So Grace goes to Trent and Trent goes, hey, it's great, Grace. I'll sell to you any day. I love you. I just don't like Warren. And then to his horror, Trent finds out 3 months later he sold a house to me. It was an old thing that would be done to purchase companies and in hostile takeovers, and I used to be a lawyer. So I remember thinking, what if we did that with cryptos? I mean, there must be a way to do it. So this is what I ended up coming up with. And I've had accountants say, wow, this is pretty good what you've done. And I'm like, yeah, well, I think so. I hope so anyway. And how it works is that, let's say that you set up a company trust and you want to have your Bitcoin or Ethereum owned with it. So we have a trust minute first and foremost, and you can have a charitable foundation, you can have the trustee. So, and then what it says is it's a resolution saying that they're all owned in the name of the trust, and then it goes through a further stuff that ensures that the cryptocurrency exchange accounts and all that kind of stuff, not limited to all this stuff, are automatically held on behalf of the trust. So what it means is, let's just say that dear old Wazza has his MetaMask sitting over here, and I own $50,000 of crypto in there. So I could say, hey, all my $50,000 MetaMask, which is over here, and this has all been done by a lawyer, is actually owned by me, but on behalf of my trust. And then on top of that as well, I have a crypto agreement, which the lawyer suggests as well, like a bare trust similarity. So how this works basically is it basically assures that all the stuff that's owned in my name, in Warren's name, like let's say I've got my Coinbase in my name, I've got my my MetaMask, I've got everything else. All this is effectively being held on behalf of my trust. And I'll give you a further example of this. We'll actually do a real life example, which I've done here. So you've got John Smith here, and we've got the minutes. Let's just get the minute up first. So ABC Limited over here, as trustee for this. It's resolved that the cryptocurrency accounts already held in the name of John Smith is held on behalf of the ABC Trust. Then it's further resolved that anything held by John for the ABC Trust, etc. That's a more simple one. We've got a much more complicated now, but that's just a simple example of what's happened. Cryptos has evolved a lot since then, but that's an example of what we did in 2021. And then the crypto service agreement has everything written in there. Who thinks that's really sexy and cool, what we've done? And we've had accountants, lawyers run over this, everything. Even super fund auditors like it sexy. Yep. Who thinks I'm sexy? That's what's most important. Who thinks Trent's sexy? Yeah, dripping sexy. That's great. Yeah, I know. It's terrible, you know. Um, Anyway, you've got to have a bit of fun, got to have a bit of humor. It's my one chance I can get some admiration. Otherwise, I sit here in this lonely life doing cryptos, doing stuff like this, doing podcasts, and living the life of suffering over here in Bali at the moment. Um, so Rebecca, we love you, humor. Yeah, I was actually telling someone the other day how during COVID, some of you, who was around with COVID when I did my Ask Dr. Bill Facebook post when I was trolling around that and built a huge following by basically writing shit stirring posts about COVID. Anyone here, or most of you don't remember that? Yeah, a few of you. Yeah, it got me a huge following. That kind of showed my dark humor and the fact that I'm a pretty messed up individual. So yes, if you ever add me on Facebook and go back to my old post, you can, if you get bored, you can do that. So that's completely beside the point. The point I'm making is getting back to the important things here is that you can see now the importance of having your paperwork, and you want to do this like your insurance policies. You want it in place ahead of time. So ahead of time. So just type a Y if you can see absolutely categorically that you need to get this done if you've got cryptos. No questions asked whatsoever. And the good news is I'm about to make it as easy as fuck for you to do it. I'm about to give you a blueprint. So, hey, I've working at improving the quality of my webinar. So the first one is get your structure done correctly. So you're going to need to get some proper advice. And this is one of the things that the accountant, and this is why I spent a lot of time with a top accountant who basically who brought up stuff I hadn't thought about. So you've got to work out what kind of structure you want to get set up and how you're going to do it. That's the first thing, and you're going to need some advice. Number one. Number two is that you want to open your accounts correctly. So before I going back to this one here, again, this isn't a set rule, but if you're a trader or an investor, you want to kind of get a different kind, because if you're a trader, you know, you won't be able to get the capital gains tax discount. Whereas as an investor, you will. So one of the things you might want to be doing, for example, let's just say that you trade cryptos and just type me if you both trade cryptos, like short in and out, and you also got long term. Just type me. Because if you do that, you really need advice, because because potentially you could be losing your capital gains tax discount, or you could be losing your tax deductions. You need to have these correctly structured and separated. And I went over this with the accountant. And if you buy the package, you'll see what I mean. We've covered this in our paper. But yes, we went through this one. So if you're a long-term investor, you really want to be set up correctly for the capital gains tax discount. If you're a trader, you want to be set up for deductions. If you're a retiree or getting close to 60, you might want to be looking at something different again to make sure that you've done it properly. However you do that, you really want to be doing this properly. Then you want to open your crypto accounts correctly to make sure it's all done. So new structure, existing account, wallet management. So new structure account. So you can open it basically over here. Existing account fix or wallet management. So you want to make sure that you either open up ideally. So if you can open up your Coinbase, your Binance account in your structure, great. More often than not, you can't. And even if you can, you can't do it with your MetaMask, your Phantom, your Solana, or basically your Tracer Nano. Just type a Y if you get what I'm saying. Okay, so perfect. So ATO requirements, this is the third thing you got to be mindful, keeping your record. This is the other thing that with our new crypto paper. And I'm going to show you this shortly, give you a sneak preview. You're going to love it. It's because we've got a bookkeeper involved. And I have a rule of thumb. The way you know if you've got a good bookkeeper is they will annoy the heck out of you. In other words, they will ask stupid questions that do your head in, but they're important questions. And I knew I had a good bookkeeper when literally I was just about ready to shoot her. She was a bookkeeper connected with the accountant, but we end up coming up with solutions, with software, with all kinds of stuff. So there's ways you can integrate your software in with your crypto. So he thinks that's really cool. So you can integrate it to make all your record keeping seamless. Who likes that idea? To make a seamless system so you can just get on with making money. Just type a Y. Yeah, so this is a very important part of your cryptos too. Otherwise, you are going to be running around and you're going to be the ATO's milking buddy, okay? You're going to be available and you effectively may as well ring the ATO and say, I've got a present for you. And I'm sure that most of you don't really want to give the ATO a present as much as you probably love them or don't. Okay, implement paperwork. This is what I've given you here. You want the trust minutes, the service agreements, and you want the bare trust kind of thing. You want the, service agreements or bare trust, but you want the paperwork in place for your cryptos. It's really important. And in fact, when I sat down with the accountant, we ended up doing a 4-way scenario, and I'll kind of, just because I feel like messing with all of your heads, I'm going to mess with your head a little bit now quickly, just because I feel like being a bit mean. So as an example, we actually wrote up together, which is a bit of a sneak preview of the paper, where the scenarios where cryptos are in your own name and what you want to make sure that you do. And this is all in the paper. So it covers all the scenarios. Cryptos where you got an exchange account and you're owned by a company or family trust or super fund. Scenario 3, you want to have some in your own name and then link them to a trust. Number 4, you got them sitting in hardware. So it gives all the situations. So whether it's in a hardware or wallet, this is what you got to do. If you've got an exchange account sitting in your own name, like your CoinSpot account's in your own name, how you deal with it. If you have cryptos already in exchange account, but owned by your structure and just in your own name and nothing else. The idea of that is to really show you exactly what you need to basically have to make sure everything is done completely correctly. So there's many things you can basically do as a result of that, so to speak. So the whole idea is to make sure that you're correctly structured. And don't worry, this is why we offered a package, so you can get it done. And we've even got the contacts and the packages and things like that to get stuff done. And the 5th one is ongoing compliance. So you've got the annual returns, you've got the distribution decisions for your trusts, you've got to review your strategy, you've got the annual returns, okay, your filings. Who's finding this year helpful? Just let's check in. Who's kind of enjoying the blueprints, the step-by-step nature of what we're doing? Excellent. Yeah, I'm learning that we all like it step-by-step, don't we? So you need the crypto templates, as I mentioned. You really want to get things in place. You want to avoid the costly mistakes. So keep in mind, if you went to a lawyer direct and got all this done up, just the templates and the work alone and the agreements and getting advice, you'd be up for 2, 3, 4 grand plus, maybe 5 grand. So we're doing it deliberately, and then you got to pay for the advice. You've then got to go to an accountant. You got to do everything. So this is why I really wanted to do this. And originally the templates were drafted by moi, for moi. In other words, for me. I did them 7 years ago to sort out my own cryptos when I first got into it. And I didn't really use them for anyone else, except for a few clients, just to help them out. And then, of course, when people found out about it, so it was about 1.5 years ago, I started going, oh, people might need this. So I went to the lawyer, got them improved, and then we started offering them to people. So that's how this came about. It's sort of been a very organic evolutionary product. So just that alone, we're going to be giving you a really good offer today, by the way, deliberately. I'm going to be giving you a heap of good shit for a really good deal on this. So family trust resolutions, bare trust deed, service agreements, all kinds of stuff you can get. So, professional wording, as we've shown you already. You've also got sample service agreement as well, which is compliant and drafted by a lawyer and gone over correctly. What we've also done is video guides and walkthrough. In other words, there's videos that walk you through and tell you how to actually do your trusts, how to do your paperwork, that show you how to do everything. We've even got PDFs for those of you who don't like videos, which walk you through on everything, how to transfer cryptos, what you got to consider, and stuff you can go to your accountant and sit down with. So it makes your job really easy if your accountant doesn't understand it. So we have all this kind of stuff in there. And in fact, what makes it better now is we've got this new paper and this bookkeeper's input, that can actually give you really, really good software options as well to make your life easy. So this is designed to make your life exceptional. And I think I've just broken the world record for someone who's normally the world's biggest waffler on a webinar. I've just done this in 40 minutes. I can't believe it. So you guys can hammer the fuck out of me with questions before I go through and show you what we can do, basically. So a short webinar is a good webinar, hopefully. But yeah, just ask your questions, please. I finished quicker than I thought I would tonight. No one's got any questions? Can minutes be predated, Tom asks. Great one. Okay, great one. Look, the short answer is you can do it, but if you do it and you pretend that it was dated before, then you're backdating, and there was a federal court decision holding that was fraud. And so if you predate it, you got to be careful how you do it. You got to predate it, but ethically, where you explain that I have predated this, but this is the reason why I predated it. This is where a lawyer can help, and our templates can kind of guide you where you would, if you actually did genuinely have an intention, there's ways you can predate it, but then you explain that it was because you made a minute or you made an agreement at that time. Otherwise, the short answer is generally no, you can't do it, not legally. If you're going to do it, you have to do it the right way, and there are ways you can do it. Do we have to have a certain amount of cryptos to start with? I mean, Amber, well, I mean, if you got like $5, I mean, it probably wouldn't do much. But even so, I've seen people with very small amounts make very large amounts of money. So, yeah, I mean, really, if you've got a reasonable amount, you still want to be considering it. Tony says, Ripley's believe it or not. Yeah, as usual, you're insulting me, Tony. He's always very mean to me, this guy. Deb, thanks. Can you give an idea of the ongoing costs? Yeah, it's a bit like servicing a car, Deb. I mean, it's just whatever the cost is to set up a trust, all that. I mean, we do cover that as well. We can do trust for you. We can kind of do all that. The ongoing costs really will depend on what you get. I mean, and the account that you've got and things like that. So we will go through, but generally to set it up correctly at the beginning, I mean, setting up a trust, it depends on where you go. I mean, it's a bit like buying a car. You get what you pay for. It can be anything from a few grand to about 10, 20 grand to do everything properly. And when I say 10, 20 grand, obviously it's nowhere near that. And we'll be showing you a way to do it very cost effective if you want to anyway. Rebecca asks, can this be done with existing wallets in individual names? The answer is yes, you can do it. Just be mindful, Rebecca, about, of course, if it suddenly triggers a whole lot of tax. So part of the videos and the process show you how to make sure that there's ways you can deal with it. Like you might transfer some and not others. There's various strategies to deal with it. So it can deal with any cryptos, you're just going to be mindful of that. Then I have residency and bank account overseas. We're taxed only 15% of crypto after 1 year of holding, 7.5%. Oh, yeah. That just depends. Yeah, but if you're non-resident, that's fine. If you're a resident of Australia, you have to make sure that's been done properly. Sim, hey Sim, how are you? Foundation versus family trust, and is there any benefit to a trust offshore? Okay, good question. A foundation, of course, is tax-free. So provided you're genuinely doing a charitable, and I emphasize genuinely doing. The Charities Commission and the ATO have been auditing foundations more heavily now, and they're checking very carefully to make sure that you really are doing what you say you're doing. So yes, a foundation will be tax-free. So in theory, it's better. Just be mindful that you really do have to be running a genuine foundation, doing genuine charitable work. So that's the question on that one. In terms of going offshore, just keep in mind that if you're an Australian resident and you have an offshore structure, the government says very clearly that it's treated like it's taxable in Australia, and unless you satisfy the control foreign company or the central management control tests. I'll be covering all that next week, by the way. offshore one. So just make sure you come to that one. But yeah, offshore is very difficult if you're living in Australia as a resident to use much for tax legally anyway. People do it legally all the time and just hope they don't get caught. But it's legally, it's very hard to do it. You've got to be really willing to spend a fuckload of money to do it properly. Barbara, if you set up a company discretionary trust, can you later transfer it to offshore for living abroad? Well, yes, but you wouldn't transfer the trust offshore. You'd set up a new entity and restructure your affairs. Vinco, how is Sanitarium a charity? Well, because they're owned by a church and they do charitable work and they make profit, but they're, they actually meet all the compliance. They're owned by the church. So Sanitarium itself is a business, but they're owned by the Seventh-day Adventist Church, so it's tax-free indirectly by doing it that way. That's how we do it. So it's very clever. So again, if you're willing to turn up in my office and spend 50 to 100 grand and go through a massive process to go offshore and set up a foundation, you can do it. And if you are in that position, then what you want to do is kind of reach out to us separately. But unless you're willing to do that, then, or take a gamble and hope you don't get caught, you're better off to start with looking at this kind of stuff that we're mentioning. That's my comment on that. So offshore can work, but you got to be willing to spend 100K plus to meet the CFC, the CMC. There's a lot of stuff that you got to meet. And I've run this by so many different lawyers who've all agreed with me on this. So again, keep in mind, I'm not interested in doing stuff that's dodgy. If you want to do that, you're welcome to do that yourself. We just don't participate in that. We're what we call sleep at night people. So we like to and I like to tell you the ugly truth, even if you don't like it. So foundations are great. But like I said, are you doing it legitimately? If you do a foundation where you pretend you're doing charity, but you're not really, guess what? I'm telling you, they're looking at it now more closely. Any other questions? I'm just getting some more water, which is behind me. How do you pay yourself through a company discretionary trust? That's a bit of an interesting question, Barbara. I mean, you have to look, basically, you're best off to watch the trust one. You either pay yourself a wage or pay yourself a distribution. So I suggest you go and you watch the trust training from last week. Another option that you can do if you really want to understand trust better is there's a wonderful company called GWC, which some of you may have heard of. And if you go along and you get if you've got a free membership, or if you don't, you just get one. There is some really cool videos here on on structures which teach more about trust, and there's some brochures you can download. So, and if you want to know a little bit more about asset protection, you just go in here, and we've got some really cool stuff about protecting your property, protecting your business, protecting your individual assets, everything. So yeah, if you kind of want to squirrel down that path, you can do that as well. I have crypto and private wallet off-ramp to the ATO for offshore bank accounts, so ATO has no visibility. Absolutely. Well, if you want to go that path and hope you don't get caught, then yeah, go for your life. I mean, we don't teach that on these webinars, plain and simple, but if you wish to do that and you don't get caught, then you're going to do well. So I personally don't like doing stuff where I hope I don't get caught, not in this current world. But you're welcome to do that if that works for you. Anyone else got any questions? Who's got some good value out of this so far? And it's good. I've really saved you some time today, because now what we're going to go through is share with you a way you can get some help with us. So who here would like to get some help and even get a bit of a chat with Trent? Because I'm going to quickly go through this and then get Trent on shortly, and just run through how this works. So basically, no structure with structure, the difference that you can make this kind of stuff as to your wealth. So what the difference in your wealth over 10 years by basically structuring correctly, as you can see, is a much greater one than here. So much better. So you've got three choices to move forward. Three choices. Number one, you just hope the ATO and pray. So hope and pray is a strategy that most Australians will use. You just hope and pray and think, oh, I hope and pray that things don't get too bad. You know, I hope and I pray that this digital social media go away. I hope and pray that I don't notice it. Number two is see your accountant, see lawyers, pay 5K, probably get frustrated because they still don't know what they're doing. And if you've got an accountant who knows what they're doing, great, you know. Number three, you can take some action and get the professional templates and some guidance with us and even be linked with accountants who know cryptos today, and stuff that's been approved by accountants and lawyers. So I might get Trent to quickly jump on with me now as I walk through this and then get Trent to explain this more and how, because he's involved in some of this stuff. So I'm going to quickly show you the templates and then, of course, I'll hand over to Trent to talk a bit. But yeah, look, basically all those really cool documents that you saw, you get. All cool videos to walk through that and teach you how to structure, what you should do with your cryptos, a little bit more about the options to transfer and minimize your taxes. You get Word templates all done for you, step-by-step crypto tax protection, expert-approved strategies to protect your crypto wealth, a personalized check of your crypto templates, a one-on-one onboarding consultation, and you get email support. And then Trent's got this wealth check where you actually get a 1 hour, a 90-minute chat with him and a mud map where he will go through and create a full action plan with your structuring to guide you and come up with implementation support. So if you know that you want to trust on up, and if you want to look at getting introduced to bookkeepers, accountants who know this and software and really do this properly, Trent will go through and help you do this. And we're going to basically offer it all for one package. So in other words, for each $9.97 each, and you will see this when you go to the GWC section on the website, you will see the 90-minute wealth check. It's a $9.97 one. And then over here, we've got the crypto tax protection package for $9.97. What we're going to do is we're going to make it even better for you. Because as well as basically get this in there, I'm going to give you access to this cryptocurrency guide, which has literally been released to nobody yet. So between myself, a bookkeeper, a super specialist, which covers every single issue that you could possibly ask, and it goes through the bookkeeping software and everything. And I'm rushing through this just so obviously it's our IP. But basically, it gives everything. It gives the crypto software. It gives the different stuff you can do. I mean, it's all done in a simple, frequently asked question. So you can race through and like, let's say you think, so am I actually a trader or I'm an investor hodler? So this is answered for you. If you then go, how do different crypto activities tax? It's all answered for you. It's a game changer. And I'm sure you would agree. And so the choices that you've got the summary of packages here, but basically you got a 2-for-1 offer the day. Either you can get Trent's wealth check alone if you just want to start with something for $4.97 and just get one of them, or you can get the double pack for $9.97. So I think you would agree. It's a special offer that we're doing for 72 hours where you will basically have that choice. So you can book in for the wealth check, which means you'll get a consult with Trent, you get all the crypto templates, everything for $9.97. Or if you're like, look, I don't know if I need those templates yet, you can just book in for the wealth check for $4.97. Or if you just want the templates, you can do that. And I'll hand over to you, let you go through because you probably explain it better than me.
Thanks, Wazza. Just a couple of things there from what Waz was saying. I think it's just nice to make it clear for everybody that first and foremost, if you're not aware, but Australia works on arbitrary law is what we work on. So there is no real truth, effectively within Australia. Arbitrary law is who can prove that they're right. So everything which Warren has spoke tonight around about these crypto templates, it's the paperwork that you need. If you do not have that paperwork, like quite simply, then you are absolutely at risk. Like you can lose it all. So it's really important to understand that Australian law is arbitrary law to make sure that you've got all of your paperwork. Another thing that you can find as well too, in particular when you hold it in a trust, I think you're absolutely mad if you do not hold cryptos in a trust, like absolutely mad. A couple of things that you can do. There's places like Ainsley Wealth where once you have a trust, you can submit your trust to Ainsley Wealth. You can purchase cryptos I do this quite often where I can transfer my cryptos into gold at literally a flick of a button. So when crypto goes up and I know there's going to be a pullback, I transfer over to gold, I let it come back down, and then I move from the gold back into the crypto market. Super easy, super effective. These guys are based in Melbourne and also in Brisbane, and I use them all the time. It's one thing when you have crypto, and I'm aware everybody's got some crypto, but when you start having a lot of value in crypto, you've got to be very mindful of that. Where do you hold it? Where do you store it? If times get tough and people start looking for that, almost like looting to a degree, you want to make sure that it's secure and you want to make sure that it's safe. Another thing that I just see with crypto as well is so many people are mindful of their own crypto, but you've got to look at what happens if something happens to you. Who's going to take over your crypto? Do you have your keys secure? Do you have somebody that knows your keys? Even do you have that in your will as well? Have you got an updated will that actually integrates everything that you have with your crypto also? I think that anyone that's in crypto now is well aware that it's still early adoption at the end of the day. There's a long way to go. So one thing that I even had to do myself was a matter of even sell my cryptos when they were in my personal name and move them into a trust because I didn't have a trust that existed once upon a time. So you've got to draw the line in the sand at somewhere. And I truly believe anyone that knows the market knows that a lot's about to happen. So you definitely want to tidy things up now versus later. There may be some capital gains that you may look at the moment if they're in your personal name to move them into your trust, but then you can know that they're secure moving forward. One thing that I've actually personally ran into this challenge before where I traveled with a ledger. Now be very mindful for anybody that talks about going overseas and taking their ledger or taking whatever their cold storage is. Be aware that that crypto is classified as cash at the end of the day. So you need to declare if you're taking more than 10,000. So be very mindful when you travel with your crypto, like be super mindful when you travel with crypto. I think also as well too, my belief in this space here is just don't be sneaky with crypto. Like, just do not do it. It's going to bite you in the butt at some stage. As Warren alluded, everything's AI, and mark my words, the ATO and everybody knows what you've got. All exchanges, it's all done with your KYC. It's very, very, very clear what you have, and the ability to get those things is really quite easy. So for myself, I guess my advice to anybody that's in crypto is crypto initially, and I've been in crypto for a very long time, so I've seen it all before. And initially when crypto came, it was a bit of an attitude of, oh, we got crypto, we can operate outside of the system. But you've got to think about how you're going to get it back into the system because it's worth nothing if you can't do anything with it, right? There might be people that might accept crypto. You might be able to do a few little exchanges and deals, but generally speaking, guys, you're going to need to integrate that at some point, especially if you want to further invest it. Now, when Warren talks about, or a couple of people asked around about foundations, trusts, and all that, it's really important that you know what you're doing with your crypto. So for myself, I have a foundation, I have a church, so I hold cryptos within that church specific to what that is going to do. I then have investment trusts, and I have different crypto in those investment trusts, which is specific to what I'm going to do in my own personal investments outside what I do with my church. I've then even got cryptos in my own personal name as well too, because I like to have a bit of play money. So you've got to sort of make sure that you're aware of what your portfolio is, what your needs are, what you're going to use it for. All too often people sit on crypto and they think they're going to do great things with it once they get the money. But the key is to know what you're going to do once you get your profits. So you ensure that they're in that right place so you can execute what it is that you choose to execute. I think a will's a really big one, like to be very mindful of. And you've got to be mindful that if you hold cryptos and you're strawman and something was to happen to you, ATO and the government are aware that you've got those cryptos. Now, somebody may be sort of, burdened with a tax debt from that, especially if they can't get that crypto. So one of my things that I do, I have two close friends that know all about my crypto. They know how to access it. They know where all my keys are, you name it. So just ensure that you make sure that you're fully protected with it. So if something does happen to you, that other people can still access it. Because again, people may not be able to access it, but the ATO is going to be aware of it. So there is absolutely going to be taxes still on that. So think outside of yourself a little bit with crypto. I also think that once you've got your crypto sorted, then you can sleep easy at night, like absolutely sleep easy at night. For anyone that's been sitting on crypto for a while and they're like, I've got this crypto, I don't know what I'm going to do. How will it happen? What will I do with it? Ensure that you've got it tidied up, and trust is absolutely the way to go. In regards to that wealth check that Warren had spoke about, I've had quite a few consults the last couple of weeks, and 45 minutes is really difficult for me to really share my thoughts on exactly what your structure is. So those wealth checks will give us 90 minutes, and you really need 90 minutes. So if people have got things they want to dive deeper in, I can draw you a mud map. I'll give you your action steps. I can even give you rough costings on what you'll pay either with GWC, or if you were to pay for an accountant or a lawyer. So I can give you some real good clarity on that. So please, if that's what you need, do the wealth check. I literally have got like no time left this year, like absolutely no time. But what I have done is I've actually opened up on Saturdays to do any of those wealth checks for people. It's not really what I want to be doing, spending my Saturdays, but if it's something that you need, then I'm more than happy to help you and more than happy to assist. But I think just the takeaway message is that, again, I say the same thing to everybody. You're obviously woke up. You woke up that cryptos is definitely going to be the new thing. So make sure you do your cleaning up. Clean it up now, because at some point you're going to have to clean it up. So yeah, take advantage of the offer. If you've got your cryptos, you've got your trust, I would just encourage you to straight away move forward, jump onto these GWC templates, follow the formula, watch the videos, and tidy it all up. And some people might be in a bit of a situation at the moment where they may have made a little bit of crypto, especially if they've been in it for the last, 4 or 5 years. They may have made a little bit of crypto. Well, at some point, you're going to have to pay taxes on that if that's still within your strawman's name. So now, in my belief, would probably be a good time to transfer those over to a trust and to wear those capital gains if that need be, to ensure that when the big gains come, because we have seen nothing with crypto yet, guys, like absolutely nothing with it. We're only just starting to see institutions now. We're just starting to see the ETFs. Crypto really, for anyone in crypto, again, my personal opinion, I wouldn't be touching crypto until at least 2030 in any way, shape, or form. It's an absolute long play. So make sure you got yourself secure. So open invitation, guys. If you'd like to do a wealth check, please do. If you have those questions as well for any of those consults, which are the 45-minute consults, and crypto is an important thing. Crypto is something that I'm quite passionate about. I think also another thing with crypto is that for people that have been in it a long time, it can be a little bit disheartening because you took the risk, right, before crypto was even really adopted in any way, shape, or form. So you've taken a massive risk. So you should get the reward. Like, absolutely, you should get that reward. So ensure that you're tidy, ensure that you're secure, and make sure that you can sleep easy at night.
Excellent, Trent. So, yeah, look, he especially opened this up because literally, I mean, I don't know if it was Trent's brilliant knowledge, his good looks, or both, but basically it seems that he's basically obviously very keen, which I'm grateful, to get your structuring done, to get your work done, and so this is what we're offering. So Trent and I agreed. Originally, what we were going to do was offer a wealth check just for people of this webinar at a $4.97 only. Special offer within 72 hours where you get half price. So if you want to take that up, that's basically there's a code. If you want to get both at the same time and get the double whammy, then all you have to do is just basically go on and purchase basically the wealth check or whatever, and you will automatically get the crypto templates included. So just type, if you type option 1 is just the $4.97, option 2 is you get both. If you're interested in option 2, just type the 2 in. If you're interested. Yep, you'd be crazy not to do it. We're deliberately making this a value of a lifetime. So you will get, and believe you me, Trent's process with people is brilliant, and everyone who does it, he's one of the most caring guys I've met. Like, he spends so much time just to get the results with you. So yeah, as I said to him, I'm keeping you out of mischief and he's keeping me out of mischief. So between the two of us, we're busy serving you at the moment, not really have much else to do. Barbara says, have Ignite and crypto template and trust. Very happy. Excellent. So all you have to do is do the following. Simply go onto the site, and I'm going to give you the link right now. And it's a hard one because technically you can do either. But just go on and purchase this wealth check, and I'm going to put this into the chat, and you will get upgraded. If you do it basically and get it done, you will be upgraded. Now, I do warn you, I can honestly say sometimes people do a webinar, book in, our slots are booking out. I'm telling you, when we save it with Trent, it does happen. His calendar has exploded out of control. We've had to stop free consults. It's a bit of a problem. We've had to close down that option in the company at the moment because we just don't have any capacity. So these spots are already going pretty quickly. So I reckon they'll be gone very quickly. So I would strongly suggest that if you really are interested, that you go on here, you sign up, you grab it, and you get booked in. And you'll get a really good, one. Like I said, it's a very good offer. And then Trent will work out what you need. So there's the thing. Any final questions which any of you need to do, basically? Oh, the other thing I forgot. There's another bonus I completely forgot. I can't believe it. So as well as the paper, we're going to be doing a paid crypto masterclass to be announced, where we're going to spend a half day going through, and I'm going to teach all the advanced structuring strategies on crypto some stage in the next month. We're going to be charging for that one. You will be able to come for free if you basically join up with this. So we're deliberately making this unbelievably juicy. Who thinks it's a really good offer? Just type a Y. So you'll get this, a half-day online crypto workshop where you'll be taught how to structure properly, everything from foundations to, you know, the whole lot. Every offer. Yeah, no, we're making this unbelievably good. So yeah, yes, I kind of forgot about that. So excellent. So again, we'll make sure we put the offer in here, in the template. And thank you very much, everyone. And thank you, Trent, for being here again and making yourself available to serve people.
You're welcome, brother. Always happy to help, mate.
Yeah, and thank you, everyone, for turning up. Thank you for your loyalty, for your support of what we're doing here. We're in a perilous times. Make sure you book it, and make sure you come next week as well to the Offshore Plan B Digital Nomad. You're going to, even if you don't plan to move out of Australia, I think by the time you finish, you'll at least know in the back of your mind how you can do a plan B, because I'm telling you, and it was before COVID, I'll share something to finish off with. I don't normally talk as much about, but people who know me, and there are people here on this webinar can verify this. In 2018, I was telling people that we're going to hit some times, and I had visions of lockdowns, I had visions of vaccination experiments, and people thought I'd lost my mind. And I started to think maybe I had. Turned out I was spot on. I prepared, and clients for dinner were ready to do it. And I've been saying to friends like them, so I'm telling you, I said it's going to get worse in Australia than you think. Not forever, but this. I said you're going to be very glad that you set your plan Bs up and got your backup things in place. And I don't feel that people got a lot of time. I feel we've got time, but not a lot. So make sure, this is why we're doing these things. It's what I call our last call series over the course of this year, to really, for people to start at least taking the plan to take action. So thank you, everyone. Once again, here is the Wealth Tech link in there for you to enroll. And thank you once again for being here, and I'll see you soon, everyone. Bye for now.